Hello, Culture Matters podcast. Boy, am I excited to introduce you to our guest today. Before I do that, here is a quote just for this podcast. No one can build you the bridge on which you and only you must cross the river of life. There is one path in the world that none can walk but you. Where does it lead? Don't ask. Walk.
I love it.
Friedrich Nietzsche. Our guest today, friend of the Culture Matters podcast, introduced to me by someone we love and care deeply for on our show, a regular of the show, good old Billy B, Bill Ryman. Our guest today has been in the financial advisory and services business for, almost 20 years. They
I think I'm
worked their
over
way
that now.
from
I think I'm over that now. I'm getting old, Jay. I'm getting old.
aging backwards, just like Benjamin Button, 2 decades plus in this business. Founder of Tailored Wealth, tailoring wealth building strategies and advisory for very successful entrepreneurs and executives and the like. Dan Pascone, thanks for coming on the Culture Matters podcast. I know you have a passion for leadership and development and so much more coaching we can talk about, but thanks for coming on the Culture Matters podcast. And sorry for aging you. We just getting to know each other, but
All good, man. All good.
yeah.
Age is only a number, first off. And thanks for having me on. I've been following you guys and checking out the episodes and watching your
Yeah.
posts for a while now. So it's fun to be on, and I'm looking forward to chatting with you.
Leadership, how do you view leadership? What are some of the fundamentals that you would say strong leadership, weak leadership, being a student of leadership for all these years?
Yeah, man. I could probably talk for days about that topic. Leadership is Jay, truly one of the things I'm most passionate about in life, and I get to apply it in a lot of different walks of life now, which I'm sure we'll get into. But I started leading people at a very young age and a long time ago. But I've learned a lot along the way. I've had a chance to be around some great leaders. I've had a chance to be around some not so great leaders, and you know. I guess the thing that always stuck out to me and what I always strive to be as a leader or be for my team members or be for the people that I'm leading. And I don't care if this is, the team that I'm growing at Tailored Wealth. I have a corporate background, which I had a lot of people reporting up to me. I coach Little League Baseball. I've got my coaching shirt on because we've got a game after this. So it doesn't really
Nice.
matter. You can apply these concepts to all, but I always try to strike the balance of being a leader that people know that number one, you're going to hold them accountable, but number two, you're doing it because you care about them. So it's like the balancing of holding them accountable and showing them that you really care. I can think of back to like the leaders that had the most profound effect on me, and I had a crazy high school baseball coach that was like always my favorite. I modeled some of what I do. He's a little nuts, but I modeled some of what I do around him. And I just wanted to run through a wall for the guy, and I always wanted the people that I get a chance to work with to feel the same way. And I think it's striking that balance. I think too much
Hmm.
caring or too on the care. You can never care too much, but too much of the relationship side without holding people accountable and things don't get done. Too
Hmm.
much of I'm a micromanager and all I'm going to do is hold you accountable and you don't show that you care. So it's striking that balance. Which listen, there's no easy recipe for that, and everybody does it in their own way and with their own style. But that's kind of the leader that I've always strived to be.
What do you think some core values are uh, that lead to caring?
I mean, listen, I think that you always want to start, in any business, in any team, in any structure, in any project, you're dealing with people. I know we've got a lot of robots around us, but we're still dealing with people, right? 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 We're still dealing with people. So I think caring about people, um, understanding what makes people tick and what their motivations are, and generally asking them that. I think we assume that stuff way too often.
Mm,
I think that you make assumptions around what people want out of life or their career or their role or whatever the case may be. But those assumptions are usually a lot of times off. So I think asking people what motivates them and what they're passionate about and what they're looking to get out of whatever endeavor you have the opportunity to work with them on is really really important. So I think I think it starts there and just like in any negotiation, if you can try to find win-wins for
mm.
the people that you're leading as well as the organization and you yourself as the leader, that's really important. Go ahead.
In your financial history, advising and leading, what are some questions that the most caring or intentional clients would ask?
Yeah, so it's actually interesting. I'm glad you brought that up because what we're doing with our wealth management business a lot of times is we're helping to lead people down the path of sort of financial freedom and using their finances, as I always say, to live their version of a rich life. That's kind of our company slogan or tagline. And and so we're guiding them through that. So, a lot of times I think it just starts with like, what are you looking to accomplish? Like just ask that question to people and you can apply that to, like I said, I can apply that to, the biggest client that I have today, and I can apply that to the little leaguer that I'm going to coach tonight. That question sort of plays true. So what are you looking to accomplish? And I think also asking people how they like to be coached and how they like to be led. You mentioned coaching in your intro. I am like a coaching junkie, for lack of a better term. I love coaching and I love to be coached. I really, really enjoy both, frankly. So I've coached a lot of people over the course of my life, and I've hired or, in some cases hired and paid for really high level coaches, and in other cases have had the opportunity to just, develop great mentors along the way.
What questions did would you ask if you're looking, and that's you have a lot of experience in that, wisdom in that for our audience, they're looking to be a better coach, have coaches, what questions would you ask her? How would you frame yourself in that interview process? Maybe
Yeah,
that translates to even looking for the right advisors, whatever
yeah,
context that falls in. How did you
yeah.
approach that?
I'll give you a couple of them. How are you going to help me to get to where I want to go? Right? How are you going to help me get to where I want to go? And the person asking that question has to be clear about where they want to go. And then how are you going to hold me accountable along the way? I'm never hiring a coach that's just going to tell me what I want to hear. Never,
Mm,
ever, right? I want somebody that's going to hold me accountable and call me out if I need to be.
wait, why not the why not why not have a yes person?
Well, I mean,
I
especially
found they helped me feel good about
they
myself.
can help you feel good about yourself, but there's we've got family members and hopefully friends to do that. I think that's the role that family members and friends play, although they can hold you accountable too. But no, I've always found that the best partners in any walk of life um, are ones that deeply care about you and show that through their efforts, but are willing to hold you accountable. So yeah, I've never wanted in any form of life, the yes person.
What when you my guess would be you've had to give tough make tough calls, give feedback throughout your career. What's worked for you of how to deliver that in ways that are effective?
Yeah, so I call those crucial conversations. So I started my career, Jay, at a big Fortune 100 company, and I was a benefactor of some good like leadership and HR style training, right? And one of the courses that I went through was called Crucial Conversations. It's got a pretty good brand around it today. Um,
Yeah.
and I think number one, I'll say this before I even get to how to have them. One
Hmm.
thing that I've learned in life is, and I would challenge any of your listeners to think about this question right now. What is the one conversation that you least want to have? That's probably the conversation you most need to have. Okay. So my point of that matter is anytime I've like, and I've done this, I'm guilty for sure of, putting off the conversation, putting off that crucial conversation. Um, After I've had it, I've always been better, felt better, and things have gotten better because I had it. Now, what I would say is, you know, not there are no two that are the same, but I think you need to prepare for them. That's number one. I wouldn't just wing it, right? And I'm generally a go with your gut kind of guy, but I like to prepare for those conversations. I frankly like to have a trusted partner that I could role play it with a little bit, right?
Mm,
I've got a great life partner, and she's great at allowing me to bounce ideas and conversations off of. But I've also had great corporate partners and great mentors and people like that I've been able to do that. So I think number one is preparing, and then I think the other thing is try to, as much as you possibly can, take yourself out of your own seat and out of your own mindset, and just try and just flip yourself into the other person's mindset. So
mm.
you're prepared, they're receiving this information, this feedback, this crucial conversation, this question, this direction, maybe. Um, how are they going to feel about it? What are going to be their concerns? And making sure that you deliver whatever the news is in a very straightforward but compassionate tone, but then also giving space for conversation, right? And I think you also have to define, maybe this is up for debate, or this is up for discussion, maybe, and maybe it's not. Maybe this decision has already been made. You got to be clear about that. Like, this decision has
Mm.
been made. I had a fairly a conversation around this lines with an employee about 2 weeks ago, and we did it at lunch, which I always think getting outside the office for these types of conversations is always a benefactor, right? And I was delivering some news around sort of the future direction of our firm. And it it wasn't a discussion that was up for debate. I did want to hear his feedback on it, but I had already made the decision around sort of this particular decision around some of the future steps we're going to take to grow and evolve our firm. But I wanted him to make sure that he felt heard. I wanted him to have the opportunity to ask me any questions that he may have, and I wanted to make sure that I was as transparent as I possibly could be now and in the future as questions and thoughts arise.
When it comes to the role of a financial advisor,
Yep.
how important is that ability to be prepared, or I get, is it ability or thoughtfulness on preparedness, ability to empathize, put oneself in their client's shoes, and leave things open for conversation or dialogue.
Yeah, I mean it's so critical. I mean, there's a lot of parallels, so I appreciate you kind of drawing on that. When we're delivering, we start any new client engagement with what I call a custom financial plan. So we don't work with anyone. In fact, I did a LinkedIn post on this yesterday. We won't work with anyone unless we're doing a financial plan for them up front, because we believe that's the baseline of any good financial advising, wealth management relationship, right? Um, Sometimes it's wild, and we've got clients that have a pretty broad range of assets. They're all fairly high earners, but have a fairly broad range of assets. But you'd be surprised how people are shocked in both directions. They're surprised in a good way, or they're surprised in a bad way around what their financial plan looks like. So I think it's important to allow that information to sink in. Um, and in most cases, we're engaging with someone that's got time to evolve financially and time to execute that plan, right? Which is
Mm.
that's one of the things we really look for in clients, is the ability to have enough time ahead of them that we can really make this plan a success, regardless of where they're at today, frankly. Because you've got super high earners that are way behind on their retirement, let's call it, right? And then when they see the numbers, it shocks them a little bit, even though they make a lot of money. Um, yeah, go ahead.
Oh yeah, how does that happen? I would think that would be very relatable for our audience if like the
Yeah,
people
yeah,
are striving for success. That's a high when I hear high earner, I think, competent, there's sacrifice, there's a competition
Yep.
right? In even if we're cooperating in a culture, a company we work for, or there's still competition. Like I'm going to get promoted versus you, or you
Yep.
get promoted versus me. So everyone, at some level might be able to relate to that. How does that happen? How could we do all the right things, but not necessarily be on the track to have future jet? There's that Simpsons episode. Future Homer is going to be really upset that I drank this mayonnaise
Yeah, yeah, yeah.
jar.
Yeah, so the short answer is, lack of proper planning is the short answer, right? So that to me is the most common. Sometimes there's a life event that throws things off, right? That happens too, but typically it's just from lack of planning. I mean, I've had clients that have come to me with a lot of money, and maybe they've got enough to retire, but they've never made a tax plan. So everything that they're gonna take in retirement or before retirement for that matter is not tax sensitive, is not tax strategic for that matter. So we see that oftentimes.
Wait, I thought if I bought real estate, I don't have to pay taxes.
Well, there you go. There you go. People do think
That's
that.
what the TikTok said.
Yeah, that's right. That's right. That's what the TikTok said, right? I'm a believer in having a comprehensive plan when it comes to your finances. I'm a believer in having a comprehensive plan when it comes to your business. So I do a lot of planning on the business side, and we do a lot of planning on behalf of our clients. But you'd be surprised at how, people who think they're very, very secure aren't necessarily. And frankly, on the other side, people who think that they've got a long ways to go have done a really nice job of planning, and now it's just about, I did a video, I think it posted on YouTube today, that sometimes I see people oversaving. And our advice to them is go out and live your life. Like you've done a really nice job here. Like let's take
Hmm.
advantage of what you've done, and let's make sure that it's not just about, maximizing the number that's on your statement, right? It's about maximizing the life that you live.
That's an interesting thought. Have you seen that people could have that? They're farther than they think they are, but so they're behaving in ways that ultimately have destructive natures to their overall holistic well-being.
100%. 100%. I mean, sometimes you have people that are, they keep delaying the satisfaction, right? And it's like what we try to help our clients do is really strike that balance of living life and enjoying it today while still being able to plan for the future. And now listen, what that looks like for you might be very different than what it is for me, because I may want different things. I may have different time horizons. I may have different income goals, whatever the case may be. But it's about understanding that situation and then building a plan to accomplish it. So yeah, there's times where we say to them, "Hey, listen, like go take a vacation." Like literally, we're pushing you now. We're, as your financial advisor, we are highly advocating that you go take that vacation, or buy the beach house or whatever the case may be, because you've worked hard and you've earned it.
I want to uh, do proper respect here. So you you study sports management and finance. You work with a large institution, and you worked your way up. You got great education and training, like you said, crucial conversations. That's a lot of resources. I believe that was Prudential, very known, very well established organization. You got your MBA too, and you were running as a CRO, chief revenue officer, what, 100 million a year sales company. So like, what is it? What type of unique value proposition can you bring to your clients that maybe Billy or Bobby or Sally, who's just gotten their Series 65, who does care about people, they have empathy, they want to be helpful, um, but they weren't the chief revenue officer of a $100 million company. Are there actually advantages to that, or is it, or maybe is it too, it doesn't connect? I think that's a fair question to ask if
For
I was
sure.
like a client.
For sure. Yeah. I mean, listen, I've built, sort of my past and my experience, Jay, really shapes who we serve today, right? Shapes who we serve today. So I have owned this business for about 5 years now. But as you mentioned, and by the way, I owned this business while I was still in a corporate role for a couple of years. But I we work with predominantly two different client profiles today. We work with corporate executives and we work with business owners. I was a corporate executive and now I'm a business owner. So I feel like I can really relate to those people and the challenges that they're going through outside of just their financial plan, right? Their life stuff, their family stuff, their goals, their what they want to get to, their compensation packages, their tax situation, et cetera, et cetera.
Hmm.
And
Were
I think
you
that's key. I mean, that
okay?
like people
Why?
ask me
Why?
all the, yeah, sorry. People ask me all the time. They say, how do I know when to choose? How do I know how to choose the right financial advisor or planner, right? And to me, there's certain criteria that I think you need to meet to do a really, really good job for your clients. But there's a lot of those out there, right? Then from there, it's who is the right partner for you based on your background, your situation that you can ultimately relate to.
Hmm. Yeah, if you were, at the Thanksgiving giving your one of the relatives you really care about advice on how to go through that interview process, what's your advice to that relative? And to take, because I'm thinking there's percentage of people that, they don't want to give up that control.
Right.
And so then they do nothing. Mattress, cash. Then there's others, they'll give it up freely, but maybe in the wrong hands. I'm listening. I don't know even where to start, what to do. Should I read a book? This guy, Morgan Housel says don't do anything.
Yeah.
Grant Cardone says buy real estate. This one over here says, so what advice do you give your relative at Thanksgiving on how to go through that interview process, when to start doing it, at what ages, where in their career, you know? They thought Ira was somebody from a movie that got
Yeah.
shot.
Right.
IRA. If
I got it. Yeah, I got it. All right. Individual
I'm
retirement
saying
account.
that for the other people. Yeah, for the
Ah,
if you could,
yeah, I
yeah.
get it. I got it. My advice would be this. So, all of what you just mentioned, all those things work, right? All those solutions work. Real estate, low cost investing, hedge funds work. They're super expensive, but they work. Everything works for the right person and for the right situation. I on my podcast, we have a podcast called Making Sense of Your Money, and we bring on financial experts from all walks of life. Like I've had real estate people on, I've had accountants on, I've had people that I had a guy on that built a collectibles platform where you can securitize stuff like baseball cards and dinosaur fossils. It's wild. So private equity people all over the map, right? And I learned something from each of them. But my answer to your question is the answers and the solutions and the end game shouldn't be the reason that you go with a financial partner. You should go with a financial partner because they're going to give you take a comprehensive look at your situation, understand your goals, your values, your objectives, and help to build you a plan and work with you to get there. Whether that's through real estate, whether that's through private equity, whether that's through investing in baseball cards. It doesn't really matter. It matters to each individual, but holistically, it doesn't matter because all of them can be ways to accomplish the same goal, but the goal is unique to you and your situation. So I would never work with someone that's a product provider or a product pusher. I would work with someone that is comprehensive in nature. And then I would want to know that the individual or team that I'm working with has experience working with people like me. That would be
Mm,
the key. Do you have experience working with people like me? Right.
mm,
And whatever that looks like, whether it be your profession or your walk of life. A lot of times people like to designate it based on how much money you have. I don't like to look at it that way because frankly, like I don't usually walk around the street asking my buddy how much money is in their brokerage account. Like that's usually not the discussion we're
mm,
having at a barbecue. So I think that's difficult to narrow down, and most
mm,
advisors do narrow their business based on how much you have in assets. Um, I like to look at it and say, do you work with people like me? And are you going to take a comprehensive approach? And then from there, you interview and you see who's a good fit. We've created a framework. We call it the 5 Ps of an effective wealth partnership. And we walk every new prospective client through it. And I say to them, on our exploratory meeting, if we don't align on these 5 things, we should not work together. Okay. If we don't align on these 5 things, they happen to all be P's. I'll share them with you if you'd like. But
Yeah. What are they?
yeah, sure. So the first thing is people, right? You got to get along with each other as people, right? If you don't get along as people, that's not going to work out. The number two is purpose. So you need to understand their purpose in the business. And I believe, Jay, that all businesses need to exist for a reason other than making money. Okay. Ours is what I told you earlier. It's to work with our clients to help them form their version of a rich life. Uh,
Mm.
the next is philosophy. So understand their philosophy on the business and how they go at it. I've already sort of shared with you mine, which is the financial plan is the baseline or the infrastructure or the foundation for everything that we do. So if they don't align with that philosophy, we're not a good fit, right? Number four would be process. So you have to understand the process that the partner goes through, both to onboard new clients and then to service existing ones, right? So understand that process. And then the last would be price. You have to understand very, very transparently. And my business gets a bad rap because a lot of times there's hidden fees and costs. So you need to understand exactly what the pricing structure is and how that impacts you as the client and what ultimately, are there any incentives for the advisor or the planner to use certain products or commissions or whatever the case may be? And by the way, just because there's commissions involved doesn't make them bad. We don't operate in that space, but that doesn't mean that they're bad. But you just need to understand that there needs to be transparency there.
How is the industry different when you first started in it to today?
Yeah, it's a really good question. So, the easiest answer is what I just talked about. It was mostly driven by commissionable products, and not that they don't still exist today, but this idea and this concept, and you hear it on commercials. You can't watch TV and not hear the idea of a fiduciary, right? So this idea of a fiduciary really came to fold. I mean, the bill was passed after the financial crisis of 2008, 2009, but it's really, really picked up steam in the last like 6 to 8 years. The idea of being a fiduciary has become really important, which essentially just means that the advisor is legally bound to act in the client's best interest, right? So they're not doing anything they're not managing money or making financial advice based off of their own interest. They're doing it based on the client's best interest. So that to me has been a really good thing for the business. From a more technical perspective, the idea of having more people like me, business owners in my field, have been able to gain a higher degree of independence over the last few years, and that's become a big trend. So not that the Merrill Lynch's and Morgan Stanley's and Wells Fargo's of the world don't still have, dominant positions in some cases, but I think more clients want to work with truly independent, small and mid-sized business owners than just the shop with the fancy office and the big name on their building. And then the last thing would be, virtual work has impacted us all. So the ability to do what I do over Zoom like we are today has really, really changed the game. And at least for us, by the way, I had this business model in mind even before COVID. I started to build it even before COVID, but it's taken off since then. And it allows us to connect with the right types of clients all over the country, not just in my backyard.
I have a more of a quandary into this you're saying, let's say decentralization, more consumer trust to work with the smaller shop versus that tenured, what, even it's interesting. It's maybe not even a lack of more trust in the smaller shops, but a disdain for or a lack of trust in the bigger institutions,
Sure.
maybe proliferating this small business opportunity. So I have a question about short versus long-term incentives.
Okay.
Let's say that I'm Bob, I'm a small, nimble shop. principle wise, I care implicit in that my motivator, like as a selfish gene, would be I want to be successful.
Right.
The path to that success is my client's success.
Right.
Over a 40-year timeline, the relationships that I cultivate, the reputation that I have in my community is worth more than money to me. Because if I have all the money in the world, but I don't have the reputation and I don't have the relationships, I'm nothing.
Right.
So what is your thesis on the impact that the private investors coming into the smaller or coming into the market could play a role? Because that changes in theory, it could change, well, maybe structurally, the timeline from Bob, 40 years, I'm independent, I'm small, I'm lean, my selfish genes is driving me, but ultimately I'm gonna be for my clients because over that tenure, I'm building the reputation, I'm building the relationships. But if private money is coming into the marketplace, my timeline goes from 40 years to 7
Right.
or 5. What do you, I don't know if you, it's more of a
Yeah, no, I have a couple of
philosophical.
thoughts on that. You hit
I've
on a
been
couple
thinking
of
about
points.
it a bunch and I haven't been able to really work it out. And like, what are the, and as a customer, right?
Yeah.
Generally, uh, I'm starting to think I might really trust you, but what about whoever else is involved that doesn't actually have any relationship with me and shouldn't?
Sure.
Maybe it's like a derivative. They're so far away, they don't
Right.
have emotion to care. So what do we do as, and I don't see this conversation being talked about anywhere. Now maybe I'm not trying hard enough to find the information, but so sorry, that was a mouthful, but I figured maybe you would could help with this.
Yeah, I got a couple of thoughts on that. Number one, and again, another microcosm of leadership and business and life, frankly. If you work hard enough, and I think our industry has, you can align the interests of the constituents, right? So, I've chosen a pricing structure in our business, and I'm not alone, right? I didn't magically create some new pricing structure that no one else has. But I feel very confident when I present our pricing structure to a new prospective client that my interests are very aligned with their interests, and I'm not hiding anything whatsoever. I'm sharing with them exactly what they're going to pay, how they're going to pay it, and frankly, if they want to know, I'll even share with them sort of how it gets broken down, and I'll even give them a little bit of a look under the hood of our business because I almost look at our clients as albeit this is illegal to do, but quasi investors in our business. They don't actually invest in our business, but quasi investors in our business
All true.
conceptually, right? The second piece that you mentioned, which is really, really interesting, and probably I should have mentioned in my last point, is the access for the average investor to a wide array of investment options is so much more available today than it was even 5 years ago, right? So 5 years ago, the adage was, just go put your money in the S&P 500 and let it ride. And don't get me wrong, that can still be done. That's still a path to get there. But, we're talking with almost every new client that comes on board, we're talking with them about private markets, private equity, private credit. Why? Because over the last 15 years, the public markets have substantially shrunk, right? And private markets have actually outperformed public markets with less volatility, right? So the ability for, this again, 5, 10 years ago, only the ultra wealthy could be investing in private equity, private markets, private funds, private companies, whatever the case may be. Now, they're depending on the investment, there is some level of barrier to entry, whether it be income or asset levels, but it's a lot more available to the common investor today than it was even 5 years ago. So we're seeing that as you mentioned, private money pouring in. We're seeing private money pouring into private companies now more than ever, which I think is a really, really good and unique thing. And your question around, well, I'm the investor and you're my advisor or planner, and then you're choosing the investments for me, but I don't know who's in that private equity fund, or I don't know who's
Well,
managing
it's
that private
just
equity.
it's also I'm not sure who's buying you.
Right.
I also want you to touch on that because if my investor, they're not compensated just for the AUM,
Yeah.
they're selling their company. If you can touch on that too.
Yeah, sure. So
It's
couple
doubly private or doubly penetrable, non-penetrable.
exactly, which is why you need to have that ironclad, pricing agreement. And so, I don't mind telling you, I had a brand new client, higher net worth guy asked me this question last week. He said, how are you incentivized for, like we started to talk about his investments. We haven't even fully, built everything out yet. We're working on it now. But he said, how are you incentivized by the investment companies that you just told me about? And I was able to say to him, I'm not. I'm not at all, right? Whether I use, fund A or fund B or company C or company D, it doesn't matter to me. I'm strictly doing what's in your best interest. And my compensation or my firm's compensation, because I don't get compensated individually, everything flows through to the organization that I run. Um, it is compensated directly from our clients and the transparent fee that we share with them. So listen, not everybody does it that way, but I wouldn't feel good about presenting any sort of investment option or my team presenting any sort of investment options with knowing that there's any incentive for us whatsoever. And so we're clearly able to kind of get that out of the way. And clients see and feel that now. I was talking with another CEO of a good size wealth management company earlier today, and we were just sort of chatting about how clients really look for that these days, right? It's like just such a clean story, whereas 5, 10 years ago, there was just all these hidden fees and who's being compensated by who and what commission are you getting where, and you're moving my money too fast because there's another commission available over there. I think not that that doesn't exist at all, but the industry has done a nice job of regulating that and creating a really, really clean, easy to understand fee structure that works for both the financial planning team as well as the client.
Do you think private equity has a place in the registered investment advisory space?
I do. I do.
What's what is it and how would you
Yeah, I
attest to it?
mean, private equity, people don't always understand what private equity is. Like I deal with a lot of I've got a lot of clients that are like executives at tech firms, right? So they are exposed to private equity maybe because their firm is PE backed, right? Or, they've got a board that they report up to, or, whatever the case may be. When we're dealing with private equity investments, I will say for 95% of our clients, there's a few exceptions to this where we're maybe doing something that's a little bit more customized based on what they're looking for, based on their growth potential. But generally speaking, we're still giving them a well-diversified portfolio. We're just doing it with private companies versus public ones. And by the way, most of the time it's a combination of both, right? Most of the time they're going to have a sleeve in public companies, a sleeve in private companies, a sleeve in private credit, a sleeve in and public credit, et cetera, et cetera. So they're well diversified. But what that does is by you're creating more diversification because you're getting access to more companies. And a lot of times what we found is we can significantly create more return and we can do it with less volatility, which is the one misnomer that most people have. Most people think, oh, it's a private company, it's so likely or it's got so much more risk of going out of business. Maybe that one company, but if I give you a basket of 100 of them, yeah, maybe one of them goes out of business, but eight of them are going to go up 800%, right? So we're able to get you diversified through the fund option.
What about PE buying the wealth manager?
Oh, that's a really good
Because
topic.
I'm curious how that's changing or impacting the culture of the space as a customer
Yep.
and as a culture advisor. Like, and I don't know if you how much you've thought about that or the circles that
Yep.
you're in.
I do.
It's kind of a theme that I want to be. I'm not like, does anyone actually know what, in 20 what that how is that great? Is it not? What's your thoughts
Yeah.
on that? And yeah.
So I have thoughts. I'll be transparent that my firm is completely bootstrapped, right? So I don't have to report to anybody other than my team and my clients. That's the ultimate board. But I would say this. I think that if it's structured properly, it can be a good thing because what happens in our business is there's a typically a pretty high cost unless you're doing solely referral business, right? Which some folks do, but there's a high cost to acquiring clients in our space, and the conglomerates um, are able to pay so much more for a customer, for a lead, for a view on their content than someone like me is, right? So I do think to some degree, private equity allows you to, even the game out a little bit, right? Because, if you've got a little bit more capital behind you, if you've got a really good offering, a really good solution, a really good story, and even really good content, like we invest a lot in content. Um, but it's hard to get that content out there. I've worked really hard to do that over the last few years. But if I had more money to do it, yeah, if I had Fisher Investments or Fidelity's money to do it, yeah, my story would be out there in front of a lot more people than it is today. So I think that private equity can allow you to do that if as long as, I'm a believer in never giving up full control of your firm. And because that allows you to still run it the way you want and have the philosophy and the purpose and the pricing structure that I mentioned earlier.
Or early on, this mentor coach, you mentioned a little bit crazy. What, it's someone you said, I like to be a coach and be coached. So from an advice standpoint for our listeners that seek mentorship, that are involved in personal development, what would you say his core values were that really worked for you and that you'd, impress upon people to bring on, build that team of rivals in that Lincoln sense?
Passion, passion, passion. I mean, that's what I can say about him, and that's what I remember. And he was a very aggressive, outgoing, sort of like intense personality for that matter. And I resonated with that. It doesn't resonate with everybody, but I resonated with that. Um, and I recognize that I'm a big believer in authenticity and finding your own leadership style. So my thought process there is, Jay, I think you have to show your passion for what you're doing to anybody that you're working with, but you might do it a little bit differently. Like I'll give you an example. I one of the other coaches on our little league team, right? We have a nice balance because I am sort of that passionate, yay rah rah, loud, intense kind of leader. He's very very different. He's a lot more even keel, a lot more mellow, and I think we balance each other out nicely. But he still has a way of showing his passion for the kids and what we're doing and the life lessons that we're teaching. So that's one that's sort of top of mind and timely for me because been spending almost every evening together this summer. But that would be my answer to that is find a way to show your passion. And some people do that a little bit more naturally than others. So if it's not natural to you, you've got to find a way to show it because I think all the best leaders, if they have a mission, if they have a goal, if they have something that they're looking to accomplish, I read a lot of like marketing books. I'm really reading Russell Brunson's right now. He talks about building your tribe, right? Your
Yeah.
tribe wants to follow you for some reason or another. It's not just because you yell the loudest, right? Your tribe wants to follow you for whatever your mission and your purpose is. So if you can really find ways to articulate and show that day to day, whether it be your customers, your team members, your peers, your whatever your tribe is, show them your passion and find ways to exemplify that.
For the advisors that listen to the show, what are you looking for, or are you even open to connecting with like from your business development standpoint, tailored wealth for your customers? You talked about the entrepreneurs and the executives. What about the advisors? What do you think they need? What are you looking for?
Yeah. So I'm always looking to have conversations and connect with good, talented people in my space. And I do that. By the way, I would advise that for anybody. Talk to people in your space. A lot of times I've found that my space is pretty good about not feeling like a level of competition because, we serve the broader consumer base. So there's plenty of clients out there. We don't need to feel like we're competing, right? Um, but sorry, there's an alarm that just went off in my office, but all good. So I'm always looking to connect with them. What we have as far as our unique value proposition for any advisors that we're bringing on is we've built a new client business development and acquisition system so that our advisors, what they do is they take care of the clients, right? They don't have to go find their next client because our system and the work that myself and my team do, we do that for them. The model that I've been looking to execute for a number of years now, I learned many years ago when I was at Prudential and I called on financial advisors. I recognized that there were some great people in my space, but they didn't build the books of business that they wanted to because they didn't have the business development or prospecting or client acquisition gene. What I'm building is a workplace where advisors and planners and wealth managers can come in and they can just do a great job kicking ass for the clients that they work with.
So you are open to meeting fiduciaries.
100%.
When they're, what would be your advice to them on what to ask and how to approach those conversations?
Yeah. So the
And
biggest
the
thing,
reason I think that's important is because with all this with capital flowing to this space, that can change the culture depending on how aligned the buyer is to the business. Maybe it's a 40-year-old um, RIA and the person's
right.
retiring, and there's advisors listening to this that it's not what it was then, or whatever. So what would you say your advice is to
Here's the key
approach
word you
it?
said there, Jay. You said a really important word there. You said aligned, right? Alignment is the key there. And I believe that again, that comes with the advisor that's joining a firm and that is the client working with a firm like mine. There needs to be alignment. So from the advisor perspective, and I give this advice. I mentor a lot of college kids. Our office is on our is at my alma mater's business campus. So we have a private office space within my alma mater's campus. And so I hire a lot of interns and mentor a lot of college kids. And I always tell them,
Hmm.
figure out the things that you're really good at and that you love to do and weave those within your job as much as possible, right? And I would say the same to an advisor. If financial planning and building the plan and understanding the models and projecting out the client situation is what you really love, do that as much as possible. If client relationship management, like the actual communication with clients and being around them and understanding their families and calling them on their birthdays, if you really love that, do that as much as possible.
Hmm.
If you're the rainmaker type that likes to just go out and prospect and find new business and you get joy and energy out of like the art of the hunt, we'll do that as much as possible, right? So I think that our space is diverse enough that you don't have to do all things. You can do the things that you're really good at really well and be very, very happy and build a nice career for yourself.
Just in closing, some um, easy mistakes our average listener can make around their investments when they're just doing it all alone.
Yeah, if they're doing it all alone, I would just stick to diversification as far as the investments are concerned, right? So pick the lower cost index style funds. If you're working with an advisor, you're paying to get a better solution than that. But if you're doing it on your own, stay low cost, stay diversified. The other thing I would say is tax diversify. So I would always tell folks, as you're building your wealth, invest in three different buckets. And this is a common mistake that I see. Invest in taxable, which is just your savings, your brokerage accounts. Invest in tax deferred, which is your 401k and your IRA, which you mentioned earlier. And then invest in future tax free, which is Roths. 529 plans can fit in there. There are some types of insurance that fit in there, but Roth is the biggest one. Not enough people are investing in Roths. Most owners think they can't do it. They can. They just need to structure it properly through what we call a backdoor Roth IRA.
Dan, thanks for tailoring this conversation to be helpful, not only to our listeners on the investment side, but advisors that listen, and not for the opportunity to learn a bit more about you and your culture.
Appreciate it, man. I've enjoyed the discussion, Jay. Thanks for having me on. Love what you're doing. Love the topics that you talk about. They're so important, and keep doing it, man. You're doing a great job.
For people that are listening, where can they follow you on your social platforms? You have a podcast, and you put content out every day, correct?
Yeah, I do. We do a lot of content. So what I would say is you can follow me on LinkedIn. LinkedIn, Dan Pascone is the handle, DanPascone. And then our website, our firm's website is yourtailoredwealth.com. So your tailoredwealth.com. And then our content brand is called Making Sense of Your Money. So we've got a podcast, a
Hmm.
YouTube channel, and a newsletter. And I would just tell you to go to makingsenseofyourmoney.com. You'll get access to all three of those assets. So if you like video, if you like podcasts, if you like emails, we've got a medium for whatever your flavor is. And a lot of that is geared toward helping folks to use financial strategies and tactics that the elite, the wealthy, the high earners use, and they can use a lot of them on their own if they'd like.
If you're listening to this, go follow Dan, follow that information. Please leave us a review on the Culture Matters podcast, and we will see you next time. Thank you. Thank you, my friend.
You bet. Thanks for having me.